Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic day. Today, we are doing high probability short term profits with the one, the only Mike Wade. Today, we're going to go over a quick market review. We're going to talk about some news updates. We're going to talk about last show's trade. There's three trades that we have to talk about, and all three of them are winners. Three winners straight, probably more than that straight. But right now, we're sitting at 32 out of 34 winners, which is pretty good, I guess, Then we're going to go into a live trade. We're going to give you a new trade today. And then last but not least, we're going to talk about your stocks. So get your ticker symbols ready right after this. All right, Mike, get on in here, man. How you doing today?
Hey, brother. Good morning. I'm doing well. How about you?
Doing good, doing good. It's been a busy morning already. How things looking on your side?
Oh man, as you said it, we've had some winning trades. We just keep winning here in snipers. So we're on a really nice run rate. The markets are bouncing. We're going to talk about why here in a minute. And it's a good day in paradise. I live in Costa Rica. It's nice and cool today, and it's a beautiful thing, man.
A nice chilly 85 degrees, huh?
Yeah, right. Exactly.
All right, let's get to it.
All right, let's get to it. Let's start with that news announcement that I passed your way. Consumer spending is up. All right. Now, remember, last week we had an issue with jobless claims, and then industry pundits came out and started talking about recession. It's like screaming fire in a crowded movie house. When you scream recession in a high inflationary environment, that is like causes people to run to the woods, just run away. And this morning, the futures jumped 200 points. A strong retail sales. The retail sales number came out. It was up 1%, much higher than expected, soothing recessionary fears. So let me show you what that looks like on a chart. I'm going to go into the Hub software here and show you an ETF. That's an exchange traded fund. It's a stock is what it is. And we're going to look at the ETF for the S&P 500, and that ETF is called the SPYs. And so this is where the recessionary chicken little market condition happened, where the market tanked. And we've been dribbling up somewhat into the reports for this week. Both the producer price index, the consumer price index came in cooler than expected. The jobless claims number was about what was expected, but retail sales were higher than expected. And that's a good sign that the consumers are still buying. So it soothes that issue that we might be in recession. So that dialogue is off to the sides. And currently, as I speak, the SPYs are trading at 548.74. So that's where we closed yesterday. Here was the PPI. Here's the CPI, and then we have the retail sales today. So we're now above this red line, which is the 50-day moving average. And I'm expecting from here, Ryan, we could very well see a further bullish run from here. And if you look at the other indices, like the NASDAQ, the ETF that tracks the NASDAQ, these are predominantly tech stocks, is the QQQ. And the Qs, as I speak, are trading right just under 470, right about here. So almost exactly the same pattern. And we can go through the diamonds as well. This is the Dow Jones Industrial Average. Yesterday, 400 was holding. This is a line in the sand right at 400. Resistance, 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 resistance. So that held yesterday almost to the penny. And now, as at pre-market price, the Dow should open up right under 405 at 404. So it looks like the bulls have returned. We do have a Fed announcement coming up in mid-September on the 18th of September. It's now expected that the Fed will cut rates maybe up to 0.5 percentage point. Who knows? We'll have to wait and see. And the data between now and then will have everything to do with that. So anyway, it looks like recession is out of the conversation, and further upside seems likely pretty much across the board, Ryan. Now, you mentioned winning trades, and we've had 3 of them come off last week. We put a trade on Lilly. And Lilly came out with really good earnings and lifted future guidance. We got into the trade on the 8th. This was this time last week, right? Yep, this time last week. and we sold a credit spread here. We sold the 750, bought the 745, and that netted us. I got filled at a price I didn't think was reasonable, so I dropped it to a dollar fill on that. And then we pulled that trade off some 6 days later for a 24% profit, which is gargantuan for snipers. So Lilly was a winner. And then a couple of weeks ago, we put a trade on Ferrari. Came out with good earnings. Stock went up, came down a bit, stayed above our short strike, our line in the sand at 410. We sold this spread, one of them. We sold the 410, bought the 400, netted $1.13, and we pulled that trade off. That took a little longer because the stock actually came down a little bit during the life of the trade and then took off big on the 14th. That one was a winner for about 12%. And then we also have Meta here, another winner. Got really close here. Now I've talked to I have a community of traders and we have very specific rules and we use them here. We don't get out of these trades unless the stock closes less than our short strike. In this case, a 475 put. Here, it almost happened. This was the recessionary skies falling move. The stock came down and at the end of the day closed above our short strike. We let it ride. We didn't get shaken out of the trade. And then the stock bounced and we pulled this one off for about an 11.5, almost 11.5% profit in just a handful of days. So this is the sniper approach. I'd say the one thing that is probably the thing that's let's call it the hardest about this particular approach is that we use credit spreads. So we have call options, we have put options, we can buy calls, we can buy puts, you can short those options as well. And a credit spread is the next level up. We short and go long using two different option strike prices. And we do that for a credit. And then we manage those credit spreads with very, very specific rules. One of them is that if you can buy back the spread, you can close your short spread position for 10% of the original credit received. You will automatically use that as a GTC. You will automatically collect 90% of your max profit automatically. So that's how we take our profits. And then most importantly, on the risk management side, let's go back to one of those other trades so I can give you an example. So this one we did last week on Lilly. Again, the rules are simple. If the stock closes less than the short put in this case, which is 750, then you close the spread down. You're going to lose some money. So for example, here, the stock happened to be right at our short strike, which is 750. We'd lose just over $100, but not $400. So the exit rule is the stop loss rule, I should say, is the most important rule because as traders, we manage risk and then we let the profits take care of themselves. So snipers generally has a run rate of 90% wins with the average gain being about 10% every 7 days. And Ryan, I don't know what our win streak is, but I have a feeling it's quite large. And for next week's show, I'll figure out what that is, and we will let everybody know. Now, Ryan, we have a guidebook. So there's a lot of moving parts here, and we have a free guidebook. The idea is you grab the guidebook because it's free, doesn't hurt anything, it doesn't cost you any money. Grab the guidebook, and it'll walk you through the 5 steps of sniping. And the idea that Ryan and I have is that you'll come join us every Thursday at 9:15 Eastern and trade alongside us. So, and as Ryan mentioned, we can put this up now, Ryan, I think, is you take a look at our performance this year. We've had 34 trades that we put on. 32 of them are winners. That's 94% win rate. And our average profit per trade, we call it an APL percentage, is 14.53% every 5 days. Now, the reason it's not 10%, it's 14%, not 10%, is that we just had this nice run of winners. Over time, we do lose. Usually 1 out of 10 we lose. and that'll bring the average closer to 10%. So, Ryan, I think we're doing pretty good. What do you think?
Yeah, not too bad at all. And this chart actually looks like it might be a little like last week's chart, maybe, but it says total number of trades 31. It's actually 34, and with 32 winners. So
I gave
yeah,
you the, I
might
gave you the
actually
wrong
be
site.
yeah, might actually be higher than 94%. Might be 95%.
Well, let me show you, because if you could show this screenshot here, I did run it this morning. I had 2 winning trades. I forgive me about the graphic. I didn't get that today, but this is the latest run rate after we just closed those 2 winners down this week on race and Meta, Ferrari and Meta. So total number of trades has been 34, 32 winners, only 2 losers, 94% win rate. And then here's our average profit per trade with the 2 losers baked into this price, 14.53% with on an average hold time of 5 days. All right, now listen, don't get too discouraged by 14.53%. All right, first off, if you're an options trader and you're generating 10% every month, you're doing well. Stock traders don't generate 10% a month. We can with options quite easily. But here you can see we're doing 14% every 5 days, not every month. So you could literally take a little bit of money. You can get into these credit spreads for as little as $50, and you can position size so that it's a meaningful number. But in this particular case, as an example, if you risked $353 and you made 14% on average, you could take you're in and out of the trade according to this data every 5 days. You could take that money in the next 5 days and do it again. That would be week 2. Week 3, take the same money, do it again. Week 4, take the same money, do it again. And you could literally, based on these numbers, generate 14% at least 4 times during a month. Do that math, and that should get your attention. This is a lot like, I like this analogy because it's so perfect. The movie Moneyball with Brad Pitt. He was the manager of the Oakland A's, and he went out and got players that got on base, not necessarily those players, the expensive players that got the high batting averages. He just got people that were cheaper and just got on base, and he got into the World Series by simply getting on base, getting on base, getting on base, getting on base, score a run, get on base, score a run, get on base, score a run. So that's the system. I call it sniping, because we literally stay away from the stock price. We stay away from the heat, and we put on these very high probability short-term trades to just get on base. All right, Ryan, why don't we talk about Walmart?
I would love to talk about Walmart. And it's so funny because the first thing James said whenever we came into the show was, Walmart looks like a Target.
Yeah, the high end Walmart is Target, right? Yeah, Walmart is it's a low income, not necessarily low income, but a lower income avenue for people to subsist, right? So Walmart just today or last night came out with really, really good earnings, and what they did was they they not only beat on their earnings, but they raised their future guidance. All right, so when we can get high probability simply by using a credit spread, but when you add news to it, Walmart beat on their earnings. They made more money than they said they'd make to the analysts, and they lifted future guidance. It's like saying, hey guys, we beat our earnings last time, and it's going to get better going forward. And so now here's a chart of Walmart. That's where it closed yesterday. And now Walmart is trading up at 68. Okay, so Walmart is up here. There it is right there, 68 pre-market, 68.66. So it's up a little bit from yesterday. Actually, I don't even think that's the opening price. I'll look at that in a minute. All right, so one moment here. I'm going to go to a live option chain and see. Yeah, Walmart's trading at 74. So right there, you can see I'm using Thinkorswim's simulated environment. Walmart's up at 74. So if I go back to the hub chart here, you can see that Walmart, and you're going to see it open here in a minute. But Walmart is way, way, way up here at 74 on the open. Okay, so what we're going to do now is first off, Walmart, that was the all-time high on Walmart. Walmart's now almost at 75. So that's a massive gap up to all-time highs. And they said it's going to get better going forward. Consumer spending is up, easing recessionary fears. All of that should keep Walmart from dropping at the very least, if not to keep on rolling up. So what I'm going to look at here is let's put a line in the sand, maybe right here let's try at 68. So let me zoom in here on the chart. So this is a line in the sand, I call it. It's nothing more than a simple way to say support. So if I can put my line in the sand right about here at 68, then, and Walmart's at 74, and all this good news, it's not likely that Walmart will come on back down to 68. So I'm going to try for my line in the sand. This spread that I'm about to place will make money anywhere above 68. So if the stock is at 74 and stays there, we make money. If the stock rises, we make money. If the stock drops no less than 8 points or so, 6 points or so, we're going to make money. We make money up, sideways, and down, but not down too much. And the earnings should keep the stock from dropping anyway. So this is where the probability comes in. Now, the question I don't have the answer to just yet is how much credit we can get by selling a 68 put spread. All right, get the guidebook if that doesn't make sense. So I'm going to go for the August 30, 15-day options. And I see 10 cents there right now. I'm going to sell the 68 by the 67 for 10 cents. Looks like the mid price is going to be less than that. All right, I can try for it though. Let's try for it. I'm going to send it in, selling the 68, and I can see there's not enough credit there. Okay, so what does that mean? Well, I'm not getting enough money. I want at least 10% of the spread width. That spread is $1 wide, so I need this number here, the credit that's possible to be received, to be 10 cents. 10% of $1, 10 cents. There's only 3.5 cents there at the mid price currently. So what I need to do then is slide my line in the sand closer to the heat. Now we could try for 69. I won't go any higher than 70 on this, but I'm going to try for 69, which is right about there at the top of that bar, the bottom of those bars. Support, resistance. Let's try for 69. And I'm going to keep sliding this up until we get filled. I think we might be able to get 10% at 69. I'm going to lift it up to 69. Notice I've got to talk a little faster. You got to move relatively fast on these things. And I'm seeing plenty of money there. So selling the 69, 68. And make sure, go back to the hub chart just to let everybody know. We're going to sell the 69 by the 68 underneath. Make money anywhere above 69. And currently at mid price, I see 12 cents. Let's try for 12 cents on this one. Cancel, replace, send. Looks like we might be able to get 12 cents on this one. Now I'm going to have to drop it to 10 cents. Cancel, replace. Just playing so see, it's already drying up. Had I not been teaching, I just got it. All right, I just got it. I just got it for 12 cents. Try for a minimum of 10 cents if you're playing along, and you will be in good shape, I believe, on this one. And you can see here, this Thinkorswim simulated environment gave me 12 cents. But I would take 10 cents on this minimum. So if you're not in, consider going for 10, and you should be in good shape on this one. Let me go back and check the hub charts here. Okay. All right, good. So let me show you what I just did. Okay, so just so it's really clear, selling the 69, buying the 68. So let me review this slower now that we're in. Okay. This is why you need the guidebook, because I got to move fast in the morning, because if I want to catch these credits before they dry up, I've got to get on in these trades in the first couple of minutes of the day. And of course, I'm talking and teaching relatively quickly, I realize. But this is a fast game. So you need the guidebook. Just grab it down below. There's a link and it's free. So here's what we did. Precisely what we just did. We sold to open the Walmart August 30, 69 put. And then we bought to open same stock, same expiration, same strike, the put. And we got 12 cents for that spread. And we are in. So I'm going to now show you the most important rules. If you're in, the next move is, when do I exit? And the first exit, the most important exit by far, is if the stock drops and closes less than 69. Let me show you what that looks like on a chart again. So if the stock closes below this 69 level, then we're out of the trade. Actually, I'm having trouble. There we go. Let me go back to the chart here just to make it really visual. So there's our line in the sand. Walmart's up here at 74. If Walmart starts coming back down and closes below our 69 level line in the sand, then you take this off for a managed loss. Take it off for a managed loss. Okay? So that's number one. Now, I'm not just throwing trades out. What I want to do here for you is to have you be good traders, and the best traders manage risk first. Manage your risk and let the winners take care of themselves. I'm quite religious about that. Just ask my community members. I beat that drum so loudly and hard. It's the most important part of trading because we lose. All of us lose as traders. Every single trader that you've seen on YouTube or TV or wherever they're coming from, they lose. We lose sometimes, and you've got to be good at that. You got to be good losers, Ryan, really, if you want to make this work in your life. So that's the number one. And then secondly, buy back the spread to close for 10% of the original credit and use what's called a good till cancel order. So 10% of 12 cents, which is what we got, is a penny. So you place that order, let it sit there. You don't have to worry about your profits. All you got to worry about is making sure the stock doesn't close below 69. And if it is below 69 at the close, you take it off for a managed risk. That is all that we've done here to produce this portfolio that Ryan and I have been talking about. That's all we've done to produce these results here. We've done nothing more than that. Excuse me, nothing more than that. And this system is rote. You see me every Thursdays at 9:15. I do these at least one free a week. So, if you like this game, get in the game and play. Ryan, that's a good one, I think.
Yeah, I think so too. It's gonna be a good one. It's a 94% chance to win, so pretty good.
Yeah.
Paul asks, why do credits dry up soon after opening?
Yeah, that's a good question. Really good question. So, stocks like Walmart, there's another here on Cisco that we could take a look at as well. So Cisco let's stay with Walmart, but Cisco's another one we could talk about here. So there's what Walmart's done. And in the morning, the market's open at 9:30. Okay, so 9:30 Eastern time. But the news was out well before 9:30. So people like me, option traders in particular, it's like there's a feeding frenzy. There's a high influx of retail orders that come in right at the open. And the market makers, because there's like this, picture a school of fish feeding. It's like it's a madhouse, right? I want some of those Walmart options. I want Walmart options. And then the market makers lift the price of the options because they're just taking advantage of all the feeding that goes on. So what we call that is what we call premium or implied volatility rises because of all of this really big news. And that dries up after about 30 minutes or so. The high IV, the options expense starts dropping off right after the feeding starts dying down. A feeding frenzy of fish wanting Walmart's options, and the premium is increased as a result. And that's what we're trying to catch at 9:30 in the morning, which is why we start here at 9:15. I mean, Ryan, I've seen people in my community, and of course I'm doing this. they're pulling off trades within the first half hour sometimes if they catch them right. And so ideally, when you trade the system, you have your orders ready to go before the bell, before 9:30, and just put your hook in the water and maybe catch a nice fill as we did just today on Walmart. All right, Ryan, do you have any stocks to look at? Any of our?
I don't see any stocks out there right now. I put the question there a couple minutes ago. So,
well, here's one then. I have plenty of them. So here's Cisco, and Cisco also came out with earnings. And let's take a look. You can get news anywhere. Most places, your broker has news. I'm going to go to finance.yahoo.com. They have news. Just type in the symbol CSCO. And then I can come back here. Let's see. Cisco rallies 400 points on strong retail sales. Cisco Walmart surge on earnings. I also read something, let's see if it's in this news post, where they're cutting their workforce, and that should result in $1 billion of additional or $1 billion less in cost. So Cisco came out with really good earnings. Now let's go to a chart and see if we can get any premium on this. One of the first things to figure out in this system is where to draw your line in the sand. All right, so a line in the sand is nothing more than support and resistance. So look, 45, and these support resistance levels tend to reside at round numbers. So if I could get something at 45, Cisco had great earnings, and they're going to have $1 billion less in sales next year, in the coming year. Cisco is now above this blue line, which is the 200-day moving average. It opened just above, and it's risen all the way to 50. So 50 is resistance on this sucker. You see that? This is a little lesson on lines in the sand, deriving support and resistance. All right, so look at 50, round number 50, resistance, resistance, resistance. Cisco doesn't want to go above 50. When's the last time it was above 50? Right about here, and then it failed. 50, 50, 50, 50, 50. So now Cisco's dancing between this very strong resistance level and the 200-day average, which again is this blue line. So Cisco could hit this level and retract a bit like it did over here, but earnings is good. They're cutting their workforce. So the stock will most likely stay above the 200. And so now my question is, where will Cisco most likely stay above? Well, it'll definitely, not definitely, it has a very good chance of staying above 42, but I'm not going to get any credit for that. So I'll have to lift my line in the sand to a level where I get at least 10% of the spread width. Now, I've been doing this for 25 years plus, so I kind of I have a rough idea where I need to go in order to get the credit. But 45 is where I think we might be able to get a bit of credit on Cisco. And if I can't get enough, then I'll lift it to 46. That's a safe level as well. In fact, I would even consider 46 to start. But we'll try all three of these. And then you could also consider lifting the heat up, lifting the line up, getting closer to the heat for more credit. All right, so here's the relationship. If I put my credit spread down here, I'll get a lot less credit, but more probability. So as I lift my line in the sand, more credit, less probability. More credit, less probability. More credit, less probability. The closer you get to the heat, the higher the credit, the smaller the probability of profit. So let's try for 46 here. Well, let's try 45. I'm just going to take you through the progression here. All right. Again, I'm in the simulated environment in Thinkorswim. Cisco. Generally, we like 15-day options. Now, as I said, I'd like to see if I can get anything at 45. Not seeing anything at 45. I'll go to 46. And I want 1 point spreads. There's 4 cents at 46. If I go to 47, probably not enough credit. There's 6 cents credit at 5 cents credit at 47. Let's go back to the hub chart and see where 47 is on the chart. There you go. That's as close as I'd want to get. That's as close as I'd want to get. 47. I'm a little concerned that the stock is finding resistance at 50. I do like that there's strong support at both 49. There's support at 49. And then we have the 200-day averages support, which also is resistance over here. So that makes it really strong support. So you could make a case for going as close as 48.50. Let's try this. I'm going to try for 47. 47 is as close as I want to go on this one. Now, had we caught it at the open, we would have probably gotten enough credit. Let's try for 47, which is where I'm at. And I'm going to put an order in for 10 cents. And that's my bait. I'm not going to take any more or any less than 10 cents. Selling the August 30, 47 put, buying the 46. Mid price is 6, is now 10 cents. It looks like we can get this one now. I'm going to put it in for 10 cents credit, and I'm not going to go any higher on the strikes. All right, this is the order then. Sell to open, Cisco, August 30, 47 put, and then buy the underlying 46 put. I'm asking 10 cents, which once again is 10% of the spread width. That's my minimum price. I'm not going to take any less. I'll take more. I'm not going to take any less, though. So I've got a hook in the water that will fill only if Cisco drops a little bit. And there is a good chance of that because Cisco is bouncing off of resistance. See, it's already coming down just a little bit. So if Cisco drops a bit more, then we'll have a good chance of grabbing that order. Let me give it to you here. Cisco, August 30. We're selling the 47 put, buying the 46. 47. And 46. If I can type here. And a minimum price of 10 cents. Just let it sit there. Markets will move around. There's a good chance that you'll have a good chance of getting filled on this one. Again, the loss exit is the most important. If the stock closes less than 47, which is our 47 short put, our line in the sand, close it down for a managed loss. Otherwise, just let the stock do what it's going to do. Let time do what it does and devalue the position and close it down for 1 cent GTC. Ryan, another good week. I like those trades. Walmart's awesome. This one, I mistyped the symbol here. Let me do that. One last call for any trades, Ryan.
I do have one for Ulta, ULTA.
That was another I was looking at today on
Tony
Ulta.
said that there's a big bump up.
Yeah, man. Ulta came out similar to Walmart. Let's go to Ulta here. Yeah, nice. So Ulta came out with good earnings. Let's take a look quickly at the news. Tony's in my sniper community here at Michael Wade Trade Coaching, mwtradecoach.com, and he's an excellent sniper, and I really trust him. Ulta Beauty stock rallies after Warren Buffett's Berkshire Hathaway takes the stake. All right, now, listen, one of the things you got to watch out for is earnings. So this is good news. Warren Buffett's Berkshire Hathaway is jumping all over Ulta. That's why the stock rose. But this is really important, is you got to stay. I'm going to take you to a place called Earnings Whispers. All right, so this is a step a lot forget to take. All right, so Ulta has earnings on August the 29th, which is 2 weeks away. You do not want to put in a credit spread on 2 weeks before earnings, because what happens is as the earnings date approaches, the options get more expensive. So imagine selling something, just this short position that you sold for maybe 10 cents. As the stock approaches, as the expiration date approaches, those options get more expensive, not less expensive. So by selling a credit spread 2 weeks before earnings or within 2 weeks before earnings, the options get more expensive, and that works against you. So although the stock has gapped up, it looks really nice. Earnings is coming, and that's going to hurt your credit spread. So unfortunately, despite the really beautiful gap up here, we can't do anything with this one. If you did, you'd be putting yourself in a bit of jeopardy. So bottom line, no way on Ulta. Earnings is coming up too quickly. Ryan, we could go hours here, and I often do. The last call, last time I'm going to say this, just grab the guidebook underneath here. There's going to be a recording that you can watch later, but grab the guidebook. Come join us every Thursday at 9:15, and then you'll be able to play this game with me. I know I move at a fast clip because I have to in order to capture these profits. So Ryan, another day, man, another week. Great spending time with you, brother. Hope you have a good weekend.
Absolutely. Hope you do the same.
All right, man. I'm actually looking for a place to live. I'm going to go back to the jungle a little bit, but close to San Jose, so I should be in good shape. All right, everybody, have a good weekend, and we'll see you next week. Same bat time, same bat channel. Bye, everybody.